How's it going, everyone? It's Sam. I have been so excited to film this video. I've been thinking about this for the last couple weeks, probably, thinking about how a lot of people haven't put all the pieces together for Bitcoin and cryptocurrencies. I still have people that ask me why I'm excited about cryptos, and I think this is going to answer a lot of questions. For a lot of us, we might already know a lot of these reasons, and for other people, they might have no idea. They might not know what Bitcoin really is or why someone would like it. So if one of your friends asks you, why are you excited about this? You can show them this video. Heck, I would suggest watching the whole thing through because you might have forgotten some of these things. You might not have even seen some of these different charts that will make you more bullish on Bitcoin over the long term. Now, I'm not spreading hopium or anything like that. I just want to tell you some of the catalysts here to come, why people are so excited. And if you guys don't want to listen to the whole video, I have no idea how long this will be. You can turn this at a faster speed so you can kind of plow through the information, but I think it's all going to be quite relevant for anyone that's invested, wants to be invested, or even wants to have good returns in their investment portfolios over the coming years. So if you guys don't mind hitting the like button, I appreciate that. So reason number one to be bullish on Bitcoin. Okay, it is like the internet in 1997. Now, I just want to say there might be some spelling errors. You can see some red lines. I don't really care. Some of the stuff is names and syntax is different on crypto, so let's get that out of here. But it's the internet in 1997. Why do I say this? Okay, first of all, you can see this chart. This is the internet over here, mass adoption, 1997 through 2005. It took 7.5 years to get from 130 million to 1 billion. Now, Bitcoin is projected to do this in about half the time. We are almost going back 24 years, and a lot of people think this is going to be as revolutionary to the world as the internet is. So we are still on the early edge of adoption for crypto. You have to remember that, right? Think about how many people have the internet now. Think about how many people use the internet every single day. Could you explain or could someone else explain what the internet is? Probably not, right? I've seen articles like that. Stop trying to understand Bitcoin. You use the internet every single day, but you have no idea how it works. You have no idea where it is. You have no idea how it does what it does, but you use it every single day and you're comfortable using it. Can you use the banking system? Sure, but do you know how banks move money from place to place? Can you explain that? Do you even know what they do once they get a check, right? So that's where maybe you just need to think about a big picture. So that's the first thing. That is amazing to see. We are about 24 years in the past in terms of adoption compared to the internet. So that's number one. I know that's pretty big for just one of the points here. Its supply is limited, it's predictable. So for anyone that's following Bitcoin, you probably understand this. So there's a max supply of 21 million Bitcoin. Now about 18.7 million has already been mined. By mining, all that means is verifying transactions, and then the people that verify the transactions, they get rewarded for it with Bitcoin. So about 18.7 million is already mined. There's a max supply of 21 million. So there's a set amount. So that is very predictable for a lot of people that are trying to understand it. So every about 4 years, there's a Bitcoin halving. This limits the amount of rewards that new miners make. Now, usually this actually pushes up the price because they get rewarded less. There's less actually going on the market. There's less supply of new Bitcoin. So that usually ends up pushing up the price. Now, we won't get done mining Bitcoin until in the 2100s. So anyone that's worried about, hey, what's going to happen when the last Bitcoin's mined, that's very far away. The other thing is much of the supply is lost. We're talking about millions lost in the early years where people lost thumb drives, people threw stuff out. A lot of people think that there are 2 to 4 million of our 18.7 lost. And you can actually find a lot of dormant addresses that just haven't been touched in 10 years. So this also runs on blockchain. So blockchain is decentralized. There's no country that controls it. There's no single point for hackers to hack in. Imagine it this way. Let's say there were 100 people that were at an event, right? And something happened, and every single person was told to write down in their notebooks what happened. And then someone wants to go along and change what happened. They want to change what happened, maybe the person's name. Well, they would have to go in and break into 100 different houses to change the notebooks, right? That doesn't make a lot of sense. That's much harder than breaking into a bank or something like that. So it's a lot more difficult to actually to overpower. It solves many public companies' problems. There's too much inflation. So a lot of public companies have billions of dollars on their balance sheet. And do you know what happens? Well, over the last year, we've seen rampant inflation. We've seen countries printing tons of money. Now that gets into a different thing that I didn't even really post about in here, which is great countries or, first world countries like the US, whether you like the US or not, first world countries like the US printing tons of money at difficult times. And then there are other countries that print even more. Like I didn't even put that as a point on here. That really should be a point. But there are countries that print tons of money, rampant inflation, like hyperinflation, where people literally have to bring stacks of cash to get a loaf of bread because it is so devalued. Now, this solves a lot of companies' problems because they have so much money and it's losing tons of money every year. Think about if you are a company, one of the big tech companies, and you have $50 billion worth of money on your balance sheet. There's 4% inflation that year. That means you just lost $2 billion. Think about how hard it is to make $2 billion, and you lost it just like that. So it solves a lot of companies' problems because it cannot be inflated, right? One Bitcoin is one Bitcoin. There's never going to be 22 million Bitcoin. There's only ever going to be 21 million Bitcoin mined. They're massive price catalysts with public companies. Now, this is something that ARK Invest has talked about. And ARK Invest has done some really good research on Bitcoin mining and on Bitcoin and on companies adding it to their balance sheet. So this is the hypothetical price increase if Bitcoin were to replace cash on S&P 500 corporate balance sheets. If it replaced 0.1% of cash on corporate balance sheets in the S&P 500, we would see a little bit of a jump, about $4,000. If it replaced 1%, we'd see $40,000. If it replaced 10%, we'd see Bitcoin going up $400,000. So massive price increases. And we just said that it solves one of their problems, right? Which is inflation. So if they put in just a small percentage, just 10%, right? Tesla about did that right off the bat. I think it was about 7%, 8%. If they do this, we could see Bitcoin's price going up to about 440,000 because this is increased price. So this is on top of what we're already at. So massive price increase. Massive price catalyst with hedge funds. So in this same presentation, ARK talked about the impact of institutional investments on the price of Bitcoin. Now they put in a bunch of different catalysts here, whether it's the mass affluent pension funds, insurance companies, sovereign wealth funds, or high net worth individuals. We can see if high net worth individuals put in 6.5% of their allocation, we would see a price increase of almost 200,000. And then the mass affluent goes up to about 350, then pension funds, then insurance companies and sovereign wealth funds, they could push up the price of Bitcoin $500,000. That, in addition to just what we saw a minute ago, right, with the public companies, could push Bitcoin to $1 million. That's a huge price increase. So, huge potential price catalyst, which is awesome. Massive price catalyst with retirement funds. So we talked about some pension funds, we talked about mass affluent, but what about all the people that are just, normal 401k savers? What about all the Roth IRAs, all the traditional IRAs, all the other investment products that are included here, right? What about everyone that's not mass affluent? What about everyone that's just adding 0.1 Bitcoin, 0.5 Bitcoin, 1 Bitcoin, right? Think about all those people and how much that could push up the price. They don't even say that in ARK Invest's fund, in their slides there. Family offices want in. So not only do we have all these different catalysts here, but we're also getting news from Goldman Sachs that family offices are flocking to crypto investments. They found close to half of the company's family office clients are inquisitive about crypto assets. Now, these are companies, these are family funds that have tens of millions, hundreds of millions, billions of dollars, and they're looking to get into it. Something else that I did include in these different points here are the surveys done by Goldman and by some of the other banks talking about how many hedge funds are going to be in crypto. There are some interesting numbers about how many hedge funds are believing that they'll be in crypto over the next 5 years. A lot of them think that they'll have positions in crypto. JPM is to allow wealth clients access, and others will come. So it just came out recently that JP Morgan Chase is going to allow wealth clients to be able to access crypto investments, 5 different investments actually, from Ethereum to Bitcoin. And they're not going to push it out there to the clients, but if the clients ask, they are going to show it to their clients. They had to do this because they really wanted it. So many retail clients wanted in that they had to start offering it. Now, other banks will follow suit because otherwise their wealthy clients will go over to JP Morgan Chase. Now, JPM has about $700 billion worth of money in these accounts. So a lot of money may be flowing into crypto. This helps the unbanked. So if you don't know, a large portion of the world is unbanked. 2 billion people cannot access financial services because their data is not held on traditional sources. Now, this is more a problem in a lot of the developing worlds, but this allows them to have access to essentially banks, to financial services. They can use crypto because a lot of these people have phones, a lot of them have internet, but they can't have financial services because of documentation, because the banks just don't want them. There are a lot of different reasons for them to be unbanked, but now they have this ability. They have this ability to gain wealth, transfer wealth, do a lot of things that people need banks for. Mass adoption by countries. El Salvador was really the first, and there are probably more to come. So they made it legal tender recently, which is a huge catalyst, but it also helps a lot of people. Kind of going back to the unbanked there, helps a lot of people gain wealth and be able to transfer wealth a lot easier. Mass adoption by companies on balance sheets. So we talked about that a little bit here, up here, but this can be great for the price of Bitcoin, right? This can help a lot of people feel more comfortable, and it helps them get over some of the problems that they had. Elon Musk talked about this recently. There are literally negative rates in some countries. Europe actually costs you money for some banks to keep money in them. So imagine you put in $1 million and you lose part of that every single month because the bank literally takes money away from you. You have to pay to keep it at a bank. Now, it sounds kind of crazy, but when you think about it, the bank actually is doing a lot of stuff for you, right? They have lights on, they have employees to pay for, so it makes sense in that aspect. But when you compare it to what we're used to, where we're actually rewarded a lot of the time for keeping our cash different places because they go and lend it out to other people, it sounds crazy. So a lot of people might want to keep their money in Bitcoin where they don't actually have to go and pay someone to hold on to it. It's kind of crazy. There's mass adoption by companies taking transactions. Think about that. There was news about Amazon accepting cryptos as payments. There have been a lot of other companies that might supposedly take crypto as payment. Tesla did that for a while. They're probably going to get back to it soon. That has so many catalysts coming up where Amazon takes it, Apple takes it, Google takes it. Everyone down the street takes it. Everyone around you. It's just like the new Square, right? Square allows you to, or allowed a lot of people to start using credit cards and debit cards at family shops that used to only take cash. Well, crypto's coming. Many companies already have job postings for this. We've talked about Amazon, we've talked about Apple on this channel, putting up jobs for blockchain experts and cryptocurrency experts and all these types of things. Very cool to see a lot of companies starting to really dive in, a lot of big companies. So it can be cheaper than banks. It can be a lot cheaper to send cryptocurrencies, to send Bitcoin, than it is to send wires sometimes, right? I mean, think about it this way. If you send a little bit of crypto versus sending a wire for a little bit of money, you need it instantly. Your bank might charge you $50, $100, and then the other side might get fees too. This can be a lot cheaper. It's faster. So you can send a payment and get it within minutes compared to even a wire, where a lot of people that don't send wires think that they're instant, but a lot of the time wires actually take hours. Sometimes they take over like a day. It can be kind of crazy what can happen with wires, and you don't have to trust other people. I've worked in a bank. I know that there can be issues with wires and other ACHs and stuff like that. There's less regulation, right? I know as someone that worked at a bank that sometimes banks don't allow you to do certain things. You know, it's just what it is. Some banks won't allow you to buy certain products. Some banks won't allow you to work with them because you do certain things. There are all different reasons for this, but there's just less regulation. You don't have to get approval for anyone. Also, going back to faster than banks, right? A lot of the time banks are closed. So whether you have to send a payment at 10 o'clock at night or 2 a.m. in the morning or noon, you can send them via cryptocurrency. This is getting even cleaner with the mining exodus. So one other thing we have to talk about, it's more energy efficient than banks. So if we look here, the energy consumption is actually a lot less. I know that there's a lot of fear, uncertainty, and doubt about this, but Bitcoin mining consumes about 113 terawatt hours, which is less than half the banking industry. I don't even know if these numbers are correct either, because I think the banking industry honestly takes a lot more than that. When you think about all the retail banks, when you think about all the corporate offices, when you think about all the computers, when you think about everything that goes into it, right? From even people driving their cars to work at the banks. I mean, there are all different reasons that there could be a lot of energy usage for banks. And now Bitcoin mining is getting even cleaner. It's getting cleaner because a lot of the people that were mining Bitcoin, a lot of the companies, they left China. A lot of the companies that were using very non-green ways of mining, very non-green energy sources have left. So they are cleaner than ever. So you can actually make money on your crypto via appreciation, right? As time goes on, as more people want to buy in, you make money that way. You can also make money by getting interest and bonuses. A lot of different platforms are trying to get your business. Right now it's kind of the early days. It's a wild, wild west. There's a lot of ways to make money because so many people are vying for position. They'll pay you out thousands of dollars. Underneath the video, there's a link to BlockFi. They pay you up to $250. They'll pay you interest rates. Also, there's a link down there to Voyager. You only have to put $100 on their platform. They give you $25 worth of Bitcoin. They give you bonuses every time someone else signs up and do that too. So there are all different ways to make money. Both of those platforms give you interest rates. If you guys want, there are links underneath the video. So that is a great thing. There are new products. There are new loans, crypto-backed loans, there are credit cards. You can access your money without selling it. And that's something that wasn't possible years ago. A lot of companies are helping make this transition even smoother. It's getting cheaper to buy. So this might not sound like something that's very important if you just, you buy $10, $20 or something, you get charged a 1% fee. But as time goes on, and as you make more and more money in crypto, a 1% fee on $1 million, $2 million, if you're making big sells and big buys, that's pretty expensive. So it's going to get cheaper and cheaper. There's going to be a race to the bottom with a lot of these exchanges. They're going to make money other ways, but that's going to make it a lot better for retail investors. They won't have to pay like crazy to access some of their money by selling or buying or whatever. Billionaires own it. So this is great for a handful of reasons. One, it shows faith. A lot of these people are some of the best and brightest in investing. So it shows faith. Also, it keeps in the news cycle. I mean, we always hear about new billionaires that are adding it, that love it, that hate it, whatever. We can go from Carl Icahn to Ray Dalio to Kevin O'Leary, the Wolf of Wall Street, Michael Saylor. There are tons of billionaires I didn't even list on here. One other thing we could say, in addition to their 41 points, is there are a lot of famous people that are interested in it now. And we won't even go into all of them, but there are a lot of pop culture people like not DJ Khaled, who was it? Like, there's just a rapper that was talking about it a lot, and another rapper, Busta Rhymes. He likes crypto. He's talking about crypto. We have Ashton Kutcher, which is in the same room as one of the Ethereum founders. So there's a lot to be excited about there where it's getting way more mainstream. And not even every millionaire can have half a Bitcoin. It's actually closer to a third at this point. So if this becomes so mainstream that every single millionaire wants to go out and buy one Bitcoin, they can't do it. There are about 55 to 60 millionaires, give or take. I mean, this has probably changed a lot over the last year or so. But 60 million millionaires, you can only have about 1/3 of a Bitcoin. And then when you consider a couple million are lost, really gets it closer to maybe 1/4 of a Bitcoin. And then you add on the fact that there are a lot of funds, there are a lot of people that really hold on to a majority of the Bitcoin and probably won't sell it unless the price hits, $1 million, $500,000, maybe they won't even sell it then. When you consider that, it's really hard to believe how little there is for everyone. All the millionaires that want it, if they want that in addition to real estate and equities and everything else they own, they're not going to be able to get a Bitcoin. It's a household name. Everyone knows about it, wonders about it, or hates it, right? I mean, how many people have you had come up to you or talk to you, or have you heard talk about Bitcoin, saying, "Oh, it's trash," or they are wondering whether they should invest in it, or they're talking about what it is. I mean, it's a household name. Anyone that you walk up to has heard of Bitcoin. Now, whether they know what it is or not, that's something else, but everyone's heard about it. So at least now it's out there so that people can learn more about it. And as long as people hate it, right, some people just despise it. They think that it's worthless. I mean, you look at the two people that run Berkshire Hathaway, Warren Buffett and Charlie Munger, and they've literally called it rat poison before. As long as some people don't understand it or don't like it, it has upside. If you go up to someone, or if you go up to 100 people and you ask them what they think about some investment and they all like it, it's probably not a great thing to invest in. Now, it could be good, right? It could be something like Apple or Amazon the last year where it's continued to go up anyways, but it's not going to have the same upside as something that people sit on the fence of. Either some people hate it or some people love it. A lot of that will change as time goes on. I mean, if you go back 20 years and ask people whether they like Amazon or think that's a good investment, a lot of people probably would have thought it's too risky or it's overvalued, but it still had upside. So if you have strong conviction of it and people still hate it and they put in less time than you to understand it, like Michael Saylor says, if you put in 40 hours and they put in 1 hour and you like it and they hate it, that's a good thing. It's the first new asset class in hundreds of years. So one of the banks named it a new asset class. I mean, when you look at the asset classes, real estate, equities, bonds, commodities, it's really the first new asset class in hundreds of years. This is not something that's easy to do. The last new asset class that I could find was equities, and that was hundreds and hundreds of years ago. It's still a small market cap in that sense too. It's about 700 billion, 800 billion. At the peak, it was maybe 1.1 trillion or something like that. Still a small market cap. The whole cryptocurrency market is still small. It's less than $2 trillion. I think the highest we got was 2.4, something like that. Compare this to bonds, which is 120 trillion, 100 trillion for equity market, 228 trillion for the real estate market. Don't even get me started on derivatives. It's very small. So when it's so small, there's so much FUD. There's so much fear, uncertainty, and doubt. I mean, we get that even in the real estate market, even in the equity market. People want to push the price of these things around. And the thing is, this is actually bullish. Because again, it kind of goes up to what we were talking about before. While some people are scared, it has upside. While some people hate it, it has upside. So that's actually good. The fact that there's fear, uncertainty, and doubt makes it way better for everyone that is highly convicted on it. Countries banning it actually gives it more potential. I mean, this is something that's fascinating. We can look at this electricity propaganda. So this is from a while ago. While certain countries ban it, other countries will embrace it. Eventually, right? Anything that's new, people are scared of. I mean, whether it's dethroning the banks that are making billions of dollars or, the security issues, people will be scared about it. Whether it's electricity, which literally saves billions of people's lives, or whether it's cryptocurrency. People will change, but people will be fearful at first. So every country that bans it gives you more potential because you can buy the dip, but also gives it a safe haven somewhere else because other people will want to accept it to get your business and to get you to come to their country. Great content on the subject. There's way more information than there was years ago. Now you have to follow the right people because again, there's a lot of FUD, there's a lot of fear, uncertainty, and doubt. But there's a lot of information about it and ways to understand it that just weren't out a few years ago. Michael Saylor is a great example of that. He talked about how it's literally digital property. He talks about it as buying Manhattan or buying New York a couple hundred years ago. It literally can change generations. He talks about how it is digital property. It's like owning a city block in New York hundreds of years ago. And then other cryptos like Ethereum, like other apps or other platforms that can build apps on top of them, Binance, those are like buying buildings in New York. And then the cryptocurrencies that are built on them, built on Ethereum or Binance, those are like the companies that flow in and out. They can be successful, but you want to own the property because that is going to stay steady and businesses and buildings will come and go, they'll fall, they'll go bankrupt, but the property is going to be there to stay. The one chart people must see. So let's take a look at the one chart that people must see. If I was going to do a presentation on Bitcoin to a corporation, institution, either internal or external, I would lead with this chart. So this is what everyone must see. You can see supply held by entities with balance of 0.1 to 1 Bitcoin. From 2010 all the way to 2021, this is increasing. Do you see any points on this graph where the amount of people that hold 0.1 to 1 Bitcoin go down? I can't really see any. Even just like looking here, maybe right there for a day or two. Who knows? The balance is going up. Whether it's a bull market, a bear market, everyone is adopting Bitcoin. Not everyone, but more people every single month, every single year. We can even zoom in. Just this last year, you can see mass adoption, mass adoption, mass adoption. More people buying, more people buying. People want to add to their Bitcoin. That's kind of crazy to take a look at, isn't it? One thing we didn't cover yet, we talked about companies adding it to their balance sheet, companies adding Bitcoin to their balance sheet. 1 year ago, no public company owned more than 1 million in Bitcoin. We are only in the second year of public company adoption. We are still early. Very true. We talked about that a little bit, but I did not show you that slide. Huge wealth transfers coming. Younger generations love crypto. So let's take a look at the massive adoption here to come. Over the next 2 decades, the United States will experience an unprecedented shift of demographics and finances that will likely be felt by every American. Baby boomers born from 1944 to 1964 are expected to transfer $30 trillion in wealth. So these are people from about 77 down to about 56 years old are expected to transfer about 30 trillion in wealth. Now, this is jaw-dropping, as they say here, right? That's a huge amount of money. And where do they like investing? A lot of these people, a lot of the people that are their children that will be gaining this are millennials. A recent study from Pipsley found that 49% of millennials own cryptocurrency compared to 38% of Gen Xers and 13% of Gen Z. So they are the ones that are adopting cryptos. They're adopting Bitcoin. And this is when a lot of them don't have money. I think I am the youngest year of people that are in this millennial generation, and a lot of us don't have money. A lot of people my age or slightly older are just getting done with masters. They're just buying homes or having kids. They don't have money, especially to go throw at crypto, even though they might want to, right? The last year's definitely helped because there were some stimulus checks and some unemployment that helped boost their income. But a lot of people weren't able to make enough money to start investing yet, but they would like to. So imagine this $30 trillion when everyone and their brother is buying crypto and the price is going up from all these different catalysts. Everyone that's not interested in it now, when their parents pass away and they leave them a couple $100 trillion or $100,000, not 100 trillion, but $100,000 or $10,000, they're probably going to throw some into crypto. So that is interesting to take a look at. There's no real competition. Cryptos can't compete because Bitcoin has the first mover advantage. It would be very difficult to beat Bitcoin at what it does because it's already built out this network. It's already very decentralized. Anyone else that comes along will have to beat it in some different way that we're not even expecting. And I don't expect that to happen. It's very different than Ethereum or Binance, where there could be some new system that's cheaper, something like that. There's really no competition in crypto that I can see, and no one even talks about it. Ethereum, people used to talk about whether Ethereum was going to eclipse Bitcoin, and it probably will one day. But Bitcoin is so different than Ethereum, a lot of the time people don't even compare it. If they know anything about cryptos, they're not comparing Ethereum and Bitcoin besides maybe just their market cap. They're not worried that Ethereum is going to be used in the same ways that Bitcoin is. In addition to that, we have gold, which is probably the closest competition, but it's much more expensive. I mean, when you think about the storage, buying, selling, handling, it's very different. It's not as sound in terms of sound of money as Bitcoin, and yet it still has a $11 to $12 trillion market cap. So it's still much, much bigger than Bitcoin. And part of that is something that we'll discuss here in a second, but it's so much bigger when you start thinking about how big Bitcoin should become, because it is a much better version of gold. It's just that you can't hold it in your fingers. It should be much better in the long term than gold. It should be much bigger. When you think about what it can do versus gold, if you've learned about the history of gold, you know that ETFs pumped gold like crazy. So when gold ETFs came out, it was a much easier way for people to invest in gold. 2003, gold was $363 an ounce. You can see the yearly return. It went up 21%, then 5, then 17, then 23, then 31, then 3, then 27, then 27, then 11, then 5. Then it fell a little bit, and then it had some more good years. So you can see that it pumped from 300 up to 1800. So it went up 6x after gold ETFs came in. This made it so much easier for people to invest in gold, much cheaper, much more efficient. They could invest in tax advantage accounts, and ETFs are coming. There are a lot of ETFs that are waiting to be approved by the government here in the USA. A lot of other countries already have them. And then last but not least, innovation we can't even see. We can't even imagine. So the example I have about this is Tesla. Elon Musk recently talked about how he floated the idea out about a Bitcoin mining space heater or Ethereum mining space heater. He talked about how hot space heaters, or how hot miners get. And he was being asked, does Tesla think that they'll ever make like a solar Bitcoin miner where you can put it on your roof and then it just mines Bitcoin or something like that? And he said that he's thrown this out to the team, that these miners get so hot, why not make them space heaters? Like, you have a space heater in your house, it also mines Bitcoin or Ethereum. There's just so many things that we can't even think about. I mean, when electricity was invented, could you believe everything that would come out of it? Probably not, right? I mean, people weren't sitting there thinking, oh, I bet you one day I can call my parents on my phone and see their face, or on this small device that I carry with me and see their face because of electricity. The same thing that almost kills me when I touch it because I'm an idiot, because I know nothing about electricity, I can use to send messages across the world in a split second, places I've never seen. No one knows that. But that is kind of where we're at in crypto, right? The adoption of the internet. People didn't know everything that could happen. They weren't thinking about shopping online and buying anything within a day from anywhere in the world, right? They weren't thinking about that. We're not even thinking about a lot of the things that crypto can solve for us in the long term. Unless you're really dialed in, unless you are leading VeChain or Ethereum or something, you don't even understand everything that can come out of it. I don't understand everything that can come out of cryptocurrency adoption and Bitcoin and all that. But those are the 41 things that make me bullish on Bitcoin. I want to hear your thoughts. What did I miss? What should I add to this list? What are you excited about? Let me know down in the comments below. Thank you so much. If you've watched all the way to the end, that's awesome. I really appreciate you. If you want to check out the links down below to get an interest rate on your cryptocurrency, definitely check them out down below. If you guys want to know what I'm buying and selling in cryptocurrency, you can check out the link down below to the Patreon. I also give everything that I'm buying and selling in the stock market. I'd even go into like how stocks can be incorporated in this and how you can make money on different cryptocurrency investments, because this is really about Bitcoin, but you can make money in crypto related stocks, which is awesome too. Thank you guys so much for watching this. I really appreciate it. Thank you for hitting the like button, and I will see you in the next video. Bye.